Welcome to the Capital Stack Show, Real Estate Syndications and Funds.
Welcome to the Capital Stack Show, Real Estate Syndications and Funds with Shams Merchant. Shams is a commercial real estate private equity attorney who represents syndicators, sponsors, and real estate funds nationwide, helping structure deals, raise capital, and stay compliant with securities laws. I'm Leanne Lyon, and today we are talking about how real estate syndication actually works step by step. Hello, Shams. Great to see you.
Yeah, great to see you as well, Leanne.
Well, since this is our first episode, can you share a little bit about your background, how you ended up focusing on real estate syndication and private equity?
Yeah, I'd be happy to. Uh, yeah, so I originally started out as actually a commercial real estate attorney, and I was doing transactional based work for clients all across the country, particularly with acquisitions and dispositions of commercial properties. Uh, of all types, right? Apartment buildings, shopping centers, data centers, student housing, you name it. And over time, my practice developed uh, into handling more syndications and funds for clients because clients started coming to me with larger and larger projects that they needed more money to be able to actually do. And I didn't even know that world existed until a client first came to me and said, "Hey, I'm doing a $50 million deal. It's much bigger than what I usually do, and I need to go raise capital to do this deal from outside investors." And that's kind of how I was introduced to the world of private equity real estate versus just traditional commercial real estate investing, which is using your own money to do deals. And so most of my clients now they use their own money, but they also raise money from investors to do more projects and to do larger projects. And that's kind of how I fell into it.
More and bigger and better, right?
That's exactly right.
Excellent. Well, at a high level, what is real estate syndication and what is actually happening behind the scenes when a deal comes together?
Yeah, that's a fantastic question. So, it, at the most basic sense, a real estate syndication is essentially a vehicle that somebody would create to go and raise capital to do a project. That project can be a real estate investment project. It can be a business acquisition. It can be oil and gas interest. It can be investing in public securities, you name it. You can do a syndication for anything. And I've structured syndications for clients in various different industries, but I just happen to focus on real estate syndications more so than others. But we do syndications for everything, and you can do a syndication for any type of business venture, really. And so essentially what it is you're raising capital from investors to go and do that project. That's when you create a syndication. So for example, if I want to invest in a large apartment building and I want to, uh, purchase, a $30 million apartment building, and I have, $10 million, right? I need to go raise that difference, getting lending aside, right? If we're just using cash, I need to go raise that difference to be able to go buy that apartment building to invest in that project. And that's when I would create a syndication. And I would go and solicit investments from people who are interested in investing in that type of project. And then I would anticipate giving them a return for investing with me. And that's pretty much basically what it is. And there's various different types of ways to structure that from a legal perspective. But it all comes back down to essentially raising capital from passive investors, right? Investors that are just there for the ride. They don't have a say in the business. They're just there to get a return on their money, and raising money from them to go do an investment project.
So it sounds like there's a lot of people that can get involved in the syndication. Who are the key players and how do their roles differ throughout the deal?
Yeah, there's there's a lot of people that are involved in doing real estate syndications. It's mostly, it comes down to investors, right? Investors that want to scale their businesses, right? So, for example, most of my clients are real estate investors that have been investing for a couple of years and have done a few projects and now want to scale their business uh, to do more projects and to do larger projects, and that requires taking in money from passive investors, from outside capital. So what we typically call that person that's raising the money and taking investments from people is the sponsor or the GP, which stands for general partner. And so the sponsor of the deal of the syndication is putting together syndication to go raise capital to do a deal. Um, and then what we call the investors in a syndication, we call them limited partners, or yeah, we call them essentially limited partners, or if we're depending on the legal structure, sometimes we call them members. Um, and their role is really not much. All they're doing is contributing capital and investing in that particular syndication or investment fund to get an economic return over a certain period of time. Um, and so those are the two main players of what would make up a real estate syndication. A good example is like if you are going out to buy into the the public securities market, right, and buying stock of a company. For example, let's say you go and buy Apple stock. A real estate syndication is very similar to purchasing stock. The only difference is that a real estate syndication is is a is a private investment and not a public one, right? To the sponsor is similar in the sense of the company like Apple. The only difference is you're investing in a private offering versus a public offering. But it's the same situation as you investing in Apple in the sense that you don't really have any right to control what Apple does, the products they make, or the business strategy that they want to use. Same way with the syndication, you're there just to get a return on the money that you invest, and that's about it. You let the sponsor do all the work, do the run the business plan, use the strategy that they want, and you sit back and collect your economic return.
That's a really great analogy. Can you walk us through then the life cycle of a deal? From beginning to end, finding the opportunity to actually closing and operating it, and then really how long might they last?
It really depends on the type of project, but typically real estate syndications last anywhere from 2 years to 7 years, depending on what the project is. For example, if it's a ground up development project where we're building something from scratch, um, and we're gonna build a building and then lease it up, that could take 4 to 5 years. But sometimes investors will buy existing buildings to do a remodel, and then lease it up and then sell it. Those could take, sometimes as short as 3 years to run the full cycle and the full business plan. So it really depends on the strategy of the sponsor that's doing the syndication, and it depends on their investors as well and what they're looking for. Some investors want to invest in ground up development projects because the returns could be much higher because there's more risk, and some investors want to invest only in acquisition type projects because the risk is lower. The building's already existing. There's already tenants potentially at the building. And so the risk is lower of something going wrong. So it really depends on the strategy and the sponsor and the type of business that they're running. Typically, sponsors will come to me when they've identified an asset that they either want to develop or buy, and that's about the right time when they come to me to then set up the legal structure to do a syndication. Uh, that's usually the opportune time, because the way syndications work is you can't raise money or take money from investors until you have the proper legal documentation in place, the proper entities set up, and the proper notices filed with the SEC, and with state securities regulators as well, right? So we do all of that at the firm, and I structure and I file all those notices for clients. So typically they'll come to me at that time because then once all the paperwork is done, once the syndication is fully structured, we're legally compliant, then they can go start raising capital from investors. They can start taking money in the door, and then be able to go and acquire, uh, the project or to go develop it.
Excellent. So let's talk about that structure. How is a syndication typically structured from an entity and legal standpoint, and why does it really matter?
Yeah, that's extremely important when you're raising capital is the proper legal structure. One, because if the proper structure is not in place, you could potentially violate SEC regulations. You could violate state securities regulations. But two, investors will also see that you didn't properly structure it, and that's going to impact you from a capital raising standpoint as well. If you want to be successful in raising capital and you want to stay in compliance with the law, then you need to properly structure your offering or your syndication. The way they're typically structured is, well, they can be done in two ways, and there's no right or wrong way. Some of it is a preference, but typically syndications are structured either as an LLC or an LP. An LLC is a limited liability company. An LP is a limited partnership. They both operate the same ways. The LP structure has been around longer, and the LLC structure is much more newer, but it's also much more it's more nimble and flexible to do certain things. And so, more recently, when it comes to syndications, people have been using the LLC structure, though. From time to time, we still use the LP structure when it makes sense from a tax perspective, or if there's some unique situation where we need to use that particular setup. They both operate the same way in the sense that the LLC structure will have a manager, which is going to be the sponsor. They're going to be managing the syndication. And then there's going to be members, which are going to be the investors, who are going to be investing capital. Into the syndication. The sponsor also can invest capital and typically will invest their own money as well in the syndication. And when they do that, they also will be treated as a member. But separately, they're going to be sitting on the manager side because they are going to be the ones running the syndication. So typically, you'll have a manager entity, which is also an LLC, that is managing the syndication LLC, which is a main entity. And then sometimes you might have a drop down entity, which we call an SPE. That's a special purpose entity. And that's usually for lending purposes. Usually, lenders want what we call like a bankruptcy remote entity that holds the property, and that's its only job. It is 100% owned by the syndication LLC, which is where the sponsor sits, which is where the investor sits. But because the entity has so much going on, typically sometimes lenders on bigger deals will request that we create just a drop down entity that all it's doing is just holding on to the property. Um, so like look, so that's a long-winded answer for essentially there's a lot of ways to structure it, and each deal is specific, each syndication is unique, and so we figure out at the time, what's the best way to build it. But as long as we build it in an institutional way, our clients can be very successful in raising the capital, getting the proper lending on the project, and obviously staying compliant with all securities regulations, federal and state.
Sounds like a really great reason to work with somebody who really knows what they're doing.
Yeah, I I always tell clients my number one goal is to first make sure that the legal structure is properly in place, that you're fully compliant from a legal perspective, but then also we want to set up the syndication in a way that you're able to successfully market it as well, and get the investments that you want. Because the last thing you want is to spend money to set up a syndication and then not be able to raise the capital that you need to do the project. That defeats the whole purpose. So we take kind of a two-pronged approach, right? It's not just focused on legal, but more so on strategically, how are we setting this up and what are we putting in there that's going to still make it very attractive for investors, and it's going to make the sponsor successful to be able to go raise the capital. So that's how we approach every syndication.
Excellent. Well, that kind of leads into my final question for this episode, which is where do you most often see deals run into trouble on the structuring side, even when the underlying real estate itself is solid?
Yeah, there's a lot of different ways that you can run into trouble if you don't structure things properly, obviously. Um, but the biggest are that if your entities, if your operating agreement and your PPM are not structured properly, then um, you could potentially have issues when it comes to distributing profits and losses with investors. All right. So you want to make sure that your waterfall model is structured in the way that you intended, based on what you anticipate um, the projected profits or the returns are going to be for that deal. So that's one key thing that sometimes people get wrong when they don't use the right counsel to advise them on how to properly structure the waterfall. The second thing is being able to structure the fees properly, right? So the sponsor in a syndication typically takes fees to do the project, right? They get compensated usually with fees and then also with a split of the profits that gets included in the waterfall. But structuring the fees properly is also very important because if you don't either you don't put in the right fees, the right amount of fees, or how those fees are being paid, then you can have issues down the road when it comes time to execute the business plan for the project or when you go to sell it. So those are some just right off the bat, just some key things that need to be structured properly, and then if they're not, things can go wrong. But other items can be things like the proper SEC disclosures for that particular deal need to be in your documents, so that if something does go wrong, um, then you're fully insulated from a legal liability standpoint. Um, at the end of the day, when you're doing a syndication, these are investments. So there's no guarantee that there's going to be a return, that you're going to be successful, right? Investors are investing in this project with you.
Mhm.
Um, so if things do go wrong, you need to make sure that we have the right backstop in place and that all your uh, T's are crossed and I's dotted. That way, you're not incurring any legal liability for just a project going wrong. Nothing that you did that caused it. It's just market conditions may have changed, and that project did not go
Perfect.
as well as it should have. And that's when these documents really come into play. um,
Got
but,
it.
yeah, people don't think about them in the front end when everything is great. It's on the back end, I see that when they didn't properly do it the right way, that there's a lot of issues. Um, and what I always tell clients is one wrong deal, one wrong syndication, one wrong fund, one wrong investment um, can cripple, a successful investment career. Um, you don't have to hit a home run on every deal, but you do have to do things properly. That way, even if the deals don't go well, you can still continue the business. You can still continue doing other deals, and
Good.
weather the storm. So
Perfect. That is so good. Such great information. And to our audience, that is it for today's episode of the Capital Stack Show, Real Estate Syndications and Funds. If you are structuring deals, raising capital, or building a real estate investment business, understanding how these deals are actually put together is critical to doing it the right way. For more information or to connect with Shams, visit cre.law. And thanks for listening. Remember to like, subscribe, and share this episode with someone who's looking to better understand how real estate syndications really work. Thank you, Shams.
thanks so much.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.